Hey everybody, welcome to Mortgage Today for Monday, June 8th, 2024. And oh, what a day it was. UMBS were up 5 basis points in the morning. Small, but at least it was green. S&P Futures were up 1.75 points, so it's pretty much a flat morning. Calm return to the markets as traders saw positive implications from the inconclusive French election outcome that kept the far right at bay. European stocks rose and the euro erased earlier losses. S&P 500 contracts were little changed after the index's biggest weekly advance since April. U.S. Treasuries began in weak position. U.S. Treasuries began the week weaker as traders braced for the Fed Chair Jerome Powell's congressional testimony and U.S. inflation data. Powell's testimony on Tuesday and Wednesday will be closely watched, with the Fed likely needing more confirmation that inflation is under control before considering rate cuts. Bond found their range recovering from slight overnight weakness, with no major economic reports ahead apart from Powell's testimony and Thursday's CPI. We are seeing for-sale inventory build. However, we are still below pre-pandemic levels, according to research from Realtor.com, which is owned by Fox News, by the way. Yeah, same company. Go figure. For-sale inventory rose 35% on a year-over-year basis. However, median prices were flat. This might represent a mix shift as prices rose on a price per square foot basis. While inventory is up 35% year-over-year, it is still about 35% below 2019 levels. Inventory is getting closer to balance in the South and the West, where we saw a building boom over the past few years. Regions which saw muted growth post-2008, lots of the Northeast and Midwest, are now catching up with the rest of the country. It was quintessential summertime Monday to start a new week. Trading volumes were exceptionally light and volatility wasn't far behind. Most of the movement happened right at the 8:20 CME open, with Treasuries quickly repairing some of the incidental overnight damage. The 8:30 a.m. NYSE open saw a quick pop and drop, but from there it was super sideways for Treasuries and especially MBS. Both ended the day in effectively unchanged territory versus Friday. Uneventful days become less likely from here on out due to Treasury auctions, Powell testimony, and most of the important Thursday's CPI data. Friday's job report was a win for the bigger picture rate trend, but more in a sense of it helped diffuse concerns about inexplicable labor market strength in a restrictive monetary environment. It leaves a very blank canvas for CPI data to set the tone for the coming week. Data dependence is the only certainty as far as directionality. In other words, lock and float is a coin toss that waits for the big economic reports to call heads or tails. All we can tell is that CPI is a high-stakes coin, but now and then risk-averse clients might consider the tendency of Treasury auction weeks to get off to a rockier start. UMBS ended the day flat at 100.61, so at 100.61 puts us just up into this brand new range where we have enough data for a new Fibonacci line at 100.427, which has been a pretty big pretty big pivot point right there, but at least we're up in this range. Hopefully we can get some bad news. It's weird to root for bad news, but hopefully we can get some bad news to get us a run up towards that 101.392 level.